Morning all. How are we all doing? Morning Alex. Morning Johannes. Morning Kennelly. Morning Baggy. Morning David. Morning Berlino. How are we all doing? Hope you all had good weekends. Didn't do much this weekend. Boring weekend. Morning Mariam. Yeah, didn't do much this weekend. Pretty crap. One of those weekends. I'm off this weekend though, so I'm not here Friday. I'm not here Monday this week because I'm off. Having a long weekend away, which is nice. Morning, Jarmond. Right. Morning, Joy. Let's have a quick look at the news before the market opens. DAX this morning, we've had a big drop in pre-market. So we opened up with a big gap to the upside up here, and we've shot straight back down and pretty much filled the gap. Not quite, but it's pretty much done. So not much to look at there. Morning, Joaquin. So let's start off with having a look at the news beforehand. So this week, basically, we've got bits and pieces, nothing particularly exciting this week. So today we've got Empire State Manufacturing Index, which is at 130. So nothing particularly exciting usually happens off the back of that. We've got Lagarde speaking later on. 7 o'clock, we've got the claimant counts on Tuesday, tomorrow morning for the pound. And then tomorrow afternoon, we've got CPI. So that's probably the biggest event this week is the inflation figures for Canada. So that will determine what happens with interest rates moving forward with Canada. We've got the CPI for the pound at 7 o'clock. That's forecast to come down. So that'd be interesting to see what happens with that one as well. And then obviously New Zealand CPI is on Wednesday late. So that's kind of Thursday morning. Unemployment claims for the US dollar. We've got all the PMIs on Friday. So there's inflation figures basically this week. Tuesday, Wednesday, Thursday, or Tuesday, Wednesday, sort of Thursday, depending on how you look at that one. So that's basically kicking off tomorrow afternoon. So until then, I wouldn't imagine we've got an awful lot that's going to happen off the news. So we'll see what happens. But I would expect today and tomorrow morning to be kind of average days. So we'll see what happens with those. But CPI for the CAD is the first thing we've got coming up. Over weekend news, scroll back. There we go. So all we've had is Macklem speaking. That didn't really say much. I looked at that one on Saturday. Governing Council discussed the latest policy meeting, whether to raise rates or not. Well, that's what you do at policy meetings. So thanks for putting that in as red news. Other than that, not a lot else. Bank Credit Tightening Act could act as replacement for more Fed rate hikes. Bank of England mulls urgent reform on deposit guarantee scheme. And we've had the ECB coming out this morning, has the option of a 1/4 or a 0.5% move in May. Again, this is all stuff we know. So there's nothing new there, really. All same old news, basically. So buy scorecards there, obviously, for you to go and have a look at. Nothing's changed much on that. So COT data over the weekend changed slightly, but nothing dramatic. Well, let's have a quick look at COT. There we go. So as far as COT's concerned, still short Australian dollar, still short Canadian dollar, still short Swiss franc. Balanced now on the pound, pretty much 50-50 there. Ever such a slight negative balance on New Zealand, short on the yen, long the US dollar and the euro. So euro and US dollar are the main instruments that the market is still positioned long on. Everything else is pretty much a short. So euro and US dollar are your main focuses for longs. Everything else is just, as I say, not very good. But that can always obviously change with inflation figures and everything else. Morning, Danny. Morning, Derp. Yerp. Morning. I got on gold ADR. That was quick. You did that on purpose, didn't you, David? Gold ADR. Yes, on Friday, yeah. Okay. So that was a 550 off of a 315 on gold on Friday. So there's your reversal alert. There's your retest. There's your profit. Good little trade. Morning, Stevie. Morning, John. Happy Monday. Morning, Figinia. Yeah, Monday. Another Monday. Right. So, market opens in 3 minutes. Let's have a quick look at gold to start the day off. So, gold basically, we had the big drop on Friday. So, Friday was a massive US dollar rally, as we know. So, we were looking to target these propulsion gaps to the downside. There's 3 of them. That one got done on Friday with a 150 ADR. And now we're putting back. We've left. That's not really a propulsion gap, is it? Drawn properly. Propulsion gap there. So push up into there, potentially for a new leg down into there, or we might just get stuck in this massive propulsion here and then push down. This whole thing, though, if you look at it, really is one massive propulsion move. So they accumulated basically in London. New York opened, bang, we slammed down, and then we've basically done a tiny little pullback on Friday. So I'll be looking for shorts on that, continuation on the US dollar strength. There's obviously, with this US dollar, it's difficult to tell whether this is weakening or strengthening. It's very, very difficult to tell at the moment. Obviously, you can see at the moment gold is pushing up, which means we've got a slight weakness in the US dollar. So this is either a pullback on Friday. Yeah, we didn't make a new low. So you got your market structure is still intact. Low, high, higher low, higher high, higher low, higher high, higher low. Still intact for a long, which means weak US dollar. Or this, you can see the speed and aggression of this move. This is the start of a high, low, lower high, lower low reversal to take out that low. One or the other, don't know which. So it depends what your thoughts are on the US dollar, but at the moment, that's basically what's happening with gold. Market's just about to open. 10 seconds. Morning, Jonas. Brian, US dollar is overall neutral currency. It's difficult to tell with the US dollar at the moment. You look at them all on the buyer scorecard. At the moment, they're all buys, the US dollar. That is mainly because COP positioning is long. The futures market is still long the US dollar. We've also got some retail on these, which are also long the US dollar, which means we should be looking for shorts on it. So that is likely to weaken. And obviously everything against the US dollar is a sell, but there's nothing massively strong here as a sell. It is getting stronger on some of these, but yeah, I mean it's difficult because the market is positioned to say that you should be long in the US dollar, but obviously everything comes to an end, and I think we're getting to the end of the US dollar strength, and it's been fairly weak for a few weeks, isn't it? So difficult to tell. Wow, look at that gap. Blimey. Yes, difficult to tell with the US dollar at the minute. Could go either way. We will see what happens this week. So main US dollar news this week. The only real impact we've got on the US is going to be the unemployment claims on Thursday, although the Canadian CPI will obviously impact the US dollar as well. So obviously PMI is on Friday, but that's right at the end of the day, right at the end of the week. So unemployment claims on Thursday is really all we've got to look forward to today, this week for the US dollar. So, okay. So the DAX looks like it's starting to rally. Let's have a quick look at the DAX this morning before we have a look at everything else. So massively bullish on the DAX last week. Big, strong week. You can see, obviously, we are in an uptrend on the DAX. It's trending quite nicely at the moment. We've got this new high that's been put in. So last week we put a new high in and potentially continuing up. The other indices, however, if you look at everything else, we've stalled out on the NASDAQ. The Dow, we made a little bit of progress last week, but nothing to really write home about. And obviously we are still kind of potentially rolling over for a new leg down. And the S&P obviously will be very similar to the NASDAQ, pretty much the same thing. So it's difficult to tell where these markets are going at the moment. Obviously, there's a lot of uncertainty with the US dollar, so could go either way. We are breaking out the highs, though. So the DAX is obviously a lot stronger than the US indices at the minute. So where we're going today, if we're going north, there is nothing. So if we're going up, we're going up. We don't know where we're going to go. If we're coming down, however, we've got yesterday's low, which was actually right at the beginning of the Globex session. So I would take into account the low of New York as well there, somewhere in that zone, which is that propulsion gap there. We've got a propulsion gap there, and we've got obviously all this unfinished business. That one's done down here as well. So there is a potential for a drop. Going back further, we've still got this hanging over us as well, this gap fill. It's very rare for gaps to be left in the indices. It doesn't happen very often. So we've got this gap fill potentially there. So we've had an up week. Yeah, so we've had 2 up weeks on the trot now, if you look at the weekly chart. Sorry. Not that one. Don't know which indicator this is causing this crap. That? No. That? No. Bear with me. Don't know what that was. Oh. I don't know what that is. Oh, hang on. Oh, it's that. Sorry, I was mucking about with indicators at the weekend. I had another indicator on there. Get rid of that. So I'm building a new indicator. So I was playing around with some other indicators just to check code and stuff. I accidentally left it on there. So yeah, as you can see, as I was saying, we've had strong up week, unsure, strong up week. So we're basically kind of 4 weeks solid up now. Obviously, that can continue, but quite often after a push like this, we need some kind of little pullback. So your gap is here. Yeah, so that is the gap coming all the way down there. So it's difficult to know whether we're going to come back down to that level or not. And if so, how far is that the gap? Sorry, hang on. Where's the gap? 152.05. Sorry, no, the gap's in there somewhere. In there somewhere. So it's quite a long drop, basically. So we'll see what happens with it. But with these gaps, often you'll find if they get left behind, like this one, it can take a while to come back. I'm not sure I'm going to be able to find one on here that is a long one, because they usually get filled fairly quick. But you do get the odd one. There's one there actually as well, look. So did that actually get filled, that one? Let's have a look. No, we didn't get that. So there's another gap there, orphaned as well. So it does happen. It's the same as propulsion gaps, yeah. So it's rare. It's rare that they don't get filled, but you do get the odd propulsion gap every now and again that gets left behind, don't you? And these are just gaps in the same way as anything else. It's just a strong move in one direction that we haven't come back and retested and finished in both directions yet. So we will see what happens with that. But so far this morning, it looks like it's going long at the moment. So we're off to the upside. So if you're taking the 5-minute opening range break, it's there and you are long. And there's no real resistance to look at to speak of to the upside. So if you want to find upside resistance, we need to come right back to January last year. That's basically our next level of resistance. So you can see we're out the highs here. There's nothing really that's going to stop us from here until we get up to 162.89. So all the way. So from a resistance perspective, from an intraday basis, if you're long on the DAX, for example, there's nothing you can say, right, I'm going to pay attention when I get to. So it's ADRs basically. So there's nothing to really have a look at to the left. So you just need to watch price action really and look for clues. Normally you'd be able to say, right, I'm going to target that propulsion gap, or we've got a resistance coming up at 125 ADR, which is where I would expect us to get to next before we bounce. There's nothing, none of that. So we're out in the highs, just basically running. So we'll see where we go from here. Right, so that's a nice breakout this morning on the DAX. Morning, everybody else that's just arrived. Morning, Michael. Morning, John. Morning, Doreska. What a beautiful opening range. It's not bad so far. Morning, Neo. Morning, Brian. I've already said Brian. Oh, no, different Brian. Sorry. We've got multiple Brians. We've got multiple Brians. We've got multiple Johns. Very confusing. We haven't got any Keanos, though. But we have got a John Wick. Right. So we're off to the upside on the DAX. That's nice. ADRs today, so far, nothing. There's nothing on the dailies. Obviously, it's Monday, so there's nothing on the weekly ranges. There's nothing on the monthlies yet. So we're halfway through the month. Well, more than halfway through the month. We've had no monthly ranges hit yet. So this week, you want to be paying attention to the monthly ranges on the ADR dashboard. If we get any of those lit up, possibly reversals potentially coming in there as well. And only one Diamond, like ever, yes. You've got a unique name, so it's highly unlikely we will find another one. You watch, any minute now, someone's going to come and say, that's my name. Right, so ADRs, there's nothing to look at as yet. Don't think there's anything getting close either. No. No, nothing getting close. So we're miles away from all ADRs at the moment. The weeklies, obviously, we need to worry about later on in the week. I'm just going to quickly cover oil before we look at the FX pairs, because oil is very, very nicely extended. So if we look at, I say it's not extended, rather, it's got a gap, is what I mean. I don't mean extended at all. We've got this gap on oil. We had the push last week. Yeah. And after that push out of these highs, which we had like 7 days sideways, we went absolutely nowhere. So we had 2 days sideways straight after that. So oil looks like it's really struggling to get any traction at the moment, which kind of makes me feel that they may want to come and get this done. And in the same way as the DAX, yeah, we get these gaps and they very rarely get orphaned. Because there's unfinished business in here from an institutional perspective that they need to come down and sort out. So the fact that this thing hasn't just gone and rallied kind of tells me that there's no actual requirement or want, if you like, to buy this at the moment. So a drop down to $75 a barrel is quite a hike. That's $7, which is kind of 4 ADR to the downside. So what's ADR on this? 17. That's 200 and what? That's not 17. Really? 17 is ADR on this. It is actually, yeah. Sorry, I was reading the wrong figure there. So that's 600. Yeah, that's a lot, isn't it? It's 3.5, 4 ADR basically to the downside. So there's an awful lot of movement. We looked at a trade idea on this on Thursday last week, I think it was. No, it's Tuesday, sorry, wasn't it? Sorry, Friday. So this was the high we broke. And then we pulled back into it. And this is where I said this is a good looking long opportunity. So if we are going to go and put that next leg in, this is where I'd look for that long to happen. So a break of that high and a long up to 95 to 100 a barrel. If they break down below this level here, then a short down to the gap fill. And both of them were sort of somewhere between 3 to 5 are returns, whichever trade you took. So at the moment, as you can see, both of those trade conditions are still in play. So there's a good short opportunity on a break of yesterday's low, and there's a good long opportunity, I think, on a break of yesterday's high. So where we are with oil at the moment, if we break yesterday's high, there's potential for that run up to $95 a barrel and we go bullish. If we break yesterday's low, there's a chance for a run back down to at least retest these levels and see if there is a need to come and fill this gap or get a support bounce. Either way, that's a 200 ADR move to the downside. So I wouldn't recommend position trading this, but from a stop loss perspective, that is a pretty good looking opportunity for a long and a short. So I would quite happily take that. I'm waiting to see what happens with price basically at the open today, just to see if we get any traction in one direction or the other, and then I'll have a look at it when we get there. So if the long triggers on a break above that high, this is the level we need to be aware of. We might well bump straight into that and come off resistance. If the short triggers there, we've got this level here potentially coming up, which is round about ADR, which it might also find support at. So depending on whether you want to scalp sort of intraday or whether you want to go for that longer term swing move, that's a really good opportunity on oil. So I'm just eyeing that up today and watching and waiting to see where that goes. Right, RSIs. There's quite a few RSIs to look at. Morning, Anna. So we're lit up a fair bit on the RSIs. Let me just cover last week on the other strategies. So ADR at the moment, we're up 9.89% this month, 0.77 in drawdown, so hardly any drawdown at all. We've got a few bits and pieces in profit. So the ADRs are going very well still. They always do. The H1 set file, we've done some drawdown control this morning, sitting in 8.5% drawdown. There is only one pair at the moment which is really on the radar, which is the pound Swiss at 1.3%. Everything else is kind of hovering under the 1% area or around the 1% area. So there's nothing really getting into dramatic drawdown at all, apart from the pound Swiss, but that has been up and down constantly. So if we look at the pound Swiss, see the drawdown control being done there. That was the entry there. And basically all we did was just go into an accumulation and drop. Then we got into divergence, and we're still in divergence all the way. And we're kind of almost still in divergence. Not quite now, but we've got a nice divergence on the last 3 days at the minute. So it is looking very, very bullish at the moment. However, it's coming down. This is the area I said about potentially coming down to when we break this area here. There's nowhere else to go but here. So ADR today, I would say, is probably the best looking long opportunity we've had for a while on it. And we're very, very close. We're half an ADR away then from that low, which we're going to find limit orders triggering at. But this obviously has just had a multiple day collapse. The Swiss franc's powered up dramatically. So this thing's been kind of flitting around in drawdown for about a week or week and a bit. Not really any dramatic speed of movement until sort of last week, Thursday, Friday last week, it fell out of bed. So that was when it obviously broke that low. So propulsion gap targets to the upside there. We've got that unfilled propulsion gap target and that one there as well. But this is the obvious spot to come down to. So I would say probably more Swiss franc strength today, back down into here. That then is where you would take another entry. There's only 3 positions on it, so it's not, as I say, it's not in huge difficulty at the minute. But that's the area I would be looking at on that one for potential longs to get out of it. Apart from that, there's nothing much else. CAD yen is getting a little bit extended as well. That's had some drawdown control done. What's happening with these yens this morning? Canadian dollar looks fairly strong. Looks like a little bit of weakness. Yeah, a little bit of weakness in the yen as well. So CAD yen, that was an extension from there. Yeah. So in that downtrend, when you look at these in hindsight, it's really easy to go, well, that was obvious, wasn't it? They're going to come up and fill those gaps. At the time, when you're taking it at the hard right edge here, you can say, well, it's obvious they're going to come down and fill these gaps. And they will do. But it's whether or not you go for the gaps to the downside or you go for the gaps to the upside. This is where the 50-50 chance comes in, doesn't it? So when you're getting into a position like this with an RSI extension to the upside, that looks really obvious considering that. But obviously every trend has got to come to an end at some point. This is when the trend reversed. So this is what position trading is all about. Getting into a trade, and doesn't matter if you're wrong, you just deal with the trade after the matter and then get out when it gets the next target hit, which is all the way down here. There's just targets, thousands and thousands of targets to the downside. Yeah. So we're just waiting for some yen strength to come through on this one. But again, it's only 1% in drawdown. It's not the end of the world. It's not really getting anywhere dramatic at the moment, but those are the only two really that are of any issue on the H1 mean reversions. 4-hour mean reversion banked 2.38%. It's up 4.5, sitting in 3 at the moment. Again, nothing there apart from the Swiss yen. So it's all these yens basically. So Swiss yen has been in drawdown control from there. Got second position on there, still sitting in this one. That's the 4-hour set file though, is the one we're looking at. So the entry on the 4-hour was back here. So you can see the H1 got out of that trade there. That is where the H4 entered its first position. Yeah. And then it pushed down, didn't get an exit on it, and it's been pushed up ever since. So that one's still obviously driving. If you look at the speed of this move as well, real parabolic move. There's no profit take whatsoever on that entire leg up, which was from the 5th of April all the way through to the 12th when we suddenly sort of stalled out. So 7 solid days parabolic going up. Weakness in the yen, strength in the Swiss franc, perfect storm, absolutely squeezed. It's pushing again at the moment. So looking at levels on this one, if you've got too many on this and you are worrying about it and you need to do drawdown control, aggressive drawdown control, you've got this high coming up here and that high coming up there. So that is the zone I would look for aggressive drawdown control to be conducted in. Yeah, so somewhere up in here is where you're going to find limit order triggers. So that's ADR today. So push up into ADR today. Anywhere in there, I'd be looking to take aggressive drawdown control. Stops above the highs basically there. So wait for some kind of reversal to pattern to happen in there at ADR. And then obviously you can drop down onto your lower time frames, take the reverse alerts when we get into there. So that is a total of what, 3/4 of an ADR you've got somewhere up in there to look for entries to go short. And obviously that will bring your average up. The H1 set file doesn't need it because it's only got, it's at ADR at the moment. So within ADR rather. So Swiss yen. So that one's extended on the 4. The hourly, there's loads of drawdown on this, obviously, because it's constantly in the market, as you'd expect. So all hedging set files have high drawdown, which is why I don't trade them personally. But so yeah, got 13% drawdown. It's banked 9% so far this month. So we're just waiting for some movement on these. You've got one there, Swiss yen again, which is in drawdown. The pound Swiss again. The main issue with this one at the moment seems to be the New Zealand dollar Swiss. So that's got in on longs on this massive Swiss franc strength that we've had. So obviously it's longed up here somewhere and pushed all the way back down into there. So waiting for some profit take moves basically. Same as usual. So again, if you're trading the H1 mean reversion, it's a really good set file when it works. When you get squeezed on it, obviously, it's just like taking any other trade in the fact that you will need to get into it. The difference with this set file, obviously, is we're not waiting for RSI extensions. So you could, in effect, get into a trade at ADR high long, couldn't you? If we have a push up, RSI high. So if it pushes up at RSI, pulls back and does that, you will get into a long somewhere extended at the upside. So there's a lot of drop available. So that's the danger with hedging. Every strategy's got its advantage and disadvantage, and that's the problem with the hedging ones. So, right. So that's all that covered. AGB, yo, fading in Vegas. Falling asleep to your voice, counting pips instead of sheep. Salty. Okay. Whatever you say. Not quite sure I understand that one. Fading in Vegas. You've been out on the roulette tables all night, then I take it. Good man. Wish I was there. Right, Aussie New Zealand. Let's start with the RSIs. So, looking at the biases on this one, Aussie New Zealand is range bound at the moment. There's no cop bias, ever so slightly short on the cop bias. Retail at the moment are all shorting it, so it's a long Aussie New Zealand. So it's extended to the upside on the hourly and the 4 hourly. Big extension there, 75, or almost to 75, just above 70. Would be nicer if it obviously was more extended. So not actually great for me for a short at the moment. I've got one on it at the moment on the H1 M5, ready to take a second basically. That propulsion gap target down there. I don't think it's going to get a second one on actually. No, it hasn't. So what's the distance on this? 77 off of an 87. That looks like a good looking short to me, where it is now. So it's just come out of extension on the hourly, 4 hourly. We're coming up into this big propulsion gap here, look. Yeah, so there's lots of downside target on this. We've got this up here as well to think of, this older propulsion gap. But if you look at it on the hourly, this is exactly where I would look for selling price action to start coming in at this level here. So you can see this one here, obviously, as soon as we came back up, tested that, we got a nice drop. This is potentially where I think we're going to come back down and retest this. So I might take a manual on this one, Aussie New Zealand. So it's 0.89. I'm probably going to adjust the set file. Actually, no, to tell you what I'm going to do, I'm going to leave this one for the minute. I'm just going to let this play out with the EA because it's only got a single position on. This set file that I'm running at the moment on the H1 is distanced 1 ADR apart. I'm finding, as I said last week, if you were in here last week, I'm finding a lot of opportunities like this where we do a slight scale out on drawdown control. And that is really where, if you got into a second position, you had a really easy escape of a trade. But because what happens is it pushes down and then it pushes back up to ADR, or sorry, to an ADR away, you get into that second position too late. I think 0.75 is probably the optimal position for a second entry. So what I was using last year was 0.5, so half an ADR and scaling in. I found that a little bit too aggressive. One, I'm finding not quite aggressive enough. So I think the sweet spot is going to be a 0.75 ADR. So for those who don't know what I'm talking about, on the Market Reverse Alerts EA, this is the set file that's running. What it's designed to do is the positions. It gets in, obviously, to a trade. And then when prices moved 1 ADR away, it will do a 0.3 drawdown control. So it takes 30% of the position off. Yeah. And then it also scales in 1 ADR apart as well. But what I'm finding is, because this is set to 1 ADR apart and drawdown control is set to 1 ADR apart, what I'm finding is we're getting into a position with a reversal alert, which is fine. It's pushing against by 1 ADR. Yeah. And what it's doing is sometimes you're getting a reversal alert before that 1 ADR. Yeah. And it obviously doesn't take a trade because it's not far enough. It pushes up, it gets you into your drawdown control, and then it doesn't give you a reversal alert and pushes down because you've already had the reversal alert. So what happens is when the reversal alert's happening, we're not an ADR apart. So what I think is a better way to trade this is to have this set to 0.75. Sorry, leave that as it is with 0.1. Yeah. And set this to 0.75. So the distance between the trades is going to be 0.75. What that's going to mean is if we move 3/4 of an ADR and then get a reversal alert, which works, we're going to get out of that trade before we need to do the drawdown control. Also, what it's going to mean is if we get into our trade and it doesn't work and it pushes against us and it does draw down control for us, we are definitely going to get into the next reversal alert. So this one we just looked at this morning is a prime example of where this is playing out. We got our initial position. It's moved one ADR against us. We've done the drawdown control. You can see that's done on the spread there. It would have been done this morning anyway. We're going to get that reversal alert on M5, or rather we've had that reversal alert on M5, but the reversal alert was less than an ADR away. So we're just getting that scale out after an ADR because we know price moves an ADR roughly 40% of the time. So therefore what we're doing is we're getting out of trades, but we're not giving ourselves the opportunity to get the profit back in until we've moved further away. So it's slowing down the exits. So that's probably what I'm going to do today is readjust all those set files to use 0.75, which means it's going to scaling a little bit faster, but it's also going to get us out a lot quicker as well. So yeah, Aussie on New Zealand dollar is a prime example of that. So that's extended on the hourly, extended on the 4 hourly. It's absolutely ripe for a pullback where it is now. Look, yeah, as I say, yeah, he's not getting in. So that's a good looking opportunity. You've just had the reverse alert on M5 right now. So targeting those propulsion gaps down there. How do you use the draw pencil function on MT4? You mean this? This is not MT4. This is what's it called? Epic Pen. It's not an MT4. I don't think there is a draw pencil function in MT. There isn't a pencil function in MT4. That's why I use this. I can draw all sorts of things with this. But no, there isn't one in MT4. Aussie New Zealand, CAD yen, nicely extended on the hourly and the 4 hourly. We've looked at this one this morning already. So this is extended and embedded now. On the hourly, we got up there. We're stuck sideways. Yeah. So waiting for that price to just basically put that profit take move in on this one. I'm miles away on my entry. And again, if you look at the distance between this trade there and that trade there, it's 130 pips. So ADR on this is 95. So I could have got another entry on this a bit closer to that and then taken another entry there and have a nice, easier exit than I've got at the moment. But because obviously the way that it's scaling in and scaling out with the drawdown control, just being that little bit too slow to get in some of these trades. So this is the propulsion gap we're going to come back down to at some point. This one here, again, marginal whether that is actually done. I would say that's probably complete, that one there. So this is your target, which is obviously easily getting out in profit. It's just a case of waiting for the move to happen. So at the moment, got 4 positions on that one because of this, the squeeze we've had, this weakness on the yen, and obviously the US dollar powering up with the Canadian dollar. So CAD yen nicely extended on the hourly, also nicely extended on the 4 hourly. We're above the 75 again on that one. So you'll be looking for some kind of decent pullback on this out of here. Just waiting basically for that weakness to come through. However, Canadian dollar and US dollar Friday had a big, strong move. And we've also got the Canadian CPI tomorrow. So if that comes out as a positive, we're going to get more of a rally as well on the Canadian dollar. So hopefully what we can do today is get somewhere up towards ADR and get a decent bounce off of that level to bring this one back down again. But we'll see. So CAD yen nicely extended. Swiss yen also very nicely extended to the upside. We've got resistance coming up at the moment. 2 positions on this one. This weakness in the yen's continuing. So up into this area for that drop. We've already looked at that one as well, haven't we, this morning? Will you reshare those set files? No, Why would I need to do that, Henry? Come on, use the manual. Go in, click that, change this to 0.75. Okay. That's literally it. There's nothing you need to do apart from change a 1 to a 0.75. You don't have to do it, obviously. I'm just doing it because I think that's what I want to do. Up to you what you do with it. But I can reshare it. You can do it yourself. Very easy. So Swiss yen, euro pound, nicely extended as well. 4-hour RSI extension way up at the 80 level we were on Friday. It's just starting to roll over now. We're coming back into this propulsion gap again. So really nice area of resistance coming up, waiting for that pullback. Very, very strong move. Looking for a push back down into a propulsion. Hourly RSI extension, propulsion gap there. That one I would class as done. That one I would class as done. So this is really your only target, which is yesterday's low and 125 ADR. So if we don't get back down to there today, I would expect us to push up a little bit into those areas. So we've got two main key areas coming up there and there. Actually, let me just want to quickly test something. Euro pound. So this is the indicator that I'm working on at the moment, which puts in the support resistance areas as well. Yeah. So I just wanted to see, because what I'm trying to do is I'm trying to replicate myself in the way that I draw support and resistance. Obviously, I've just gone with something like that. Yeah, it's an obvious support resistance area. It's been tested multiple times. Very, very good. Basically, it's that high. So I just wanted to see where the indicator drew that in. And it's drawn it there, which is basically last week's high. So I also need previous week's high. That will give me that level, won't it? Yeah. Cool. Okay. So I just wanted to test that while I was thinking about it. So euro pound. Yeah, potential move back up into there. So taking out yesterday's high, running into resistance. Nice potential opportunity to go short. Failing that, ADR and that propulsion gap, and then come back down and fill that one at a later stage. Nice extended on the hourly. 4 hourly, very extended. So ready for a profit take move, definitely that one. However, it's just flagging at the minute. So we might flag and push again. If we do, that's fine. We'll come back down to there at a later date. We've got pound news tomorrow morning, 7 a.m. So the claimant counts tomorrow. That might be when we get that move. We've got Lagarde speaking this afternoon. She could drop the euro. Unlikely. She's more rallying the euro at the moment, but there is an opportunity. So there's a good opportunity for a short on the euro pound. Euro yen extended on the 4 hour. We've just come out of an extension on the hourly. 4 hour, we're above the 75 level. So again, good looking opportunity for shorts. Yeah. So looking for some kind of pullback drop off of that level. Yeah. Back into that propulsion. Looking at it on the hourly. You've got multiple targets to the downside. That one's probably done. That one's open. That one is definitely open. We didn't even come back and retest it at all. So plenty of movement to the downside. But again, it's the yen. The yen is too weak at the moment, and it's really letting everything sort of squeeze against it. So we need some strength in the yen. We never get any yen news, so it's just a case of whenever they're going to intervene. If we look at the US dollar yen, let's have a look at where that is. Still got a fair way upside for that one to go at the moment. So there's your euro yen. Still potentially good looking opportunities for shorts. So drop down M5, M15, wait for those reversal alerts. M5 and M15 pretty much in the same spot today because of that big strong push towards the end of Asia. So that's good for shorts. Right, pound CAD. So this is our biggest extension of the day so far. Extended on the 4-hourly, down below the 20 level we were. We're just starting to tick up now. So this is a really good support area. We've got this little wick here off of news, but if you look at where we're turning at the moment, it's here. So that point there and that point where we've turned encompasses this area here, and this sort of this was the only little tiny pullback before we came back up and retested. So this is potentially where I think we're probably going to go from. I don't think I'm going to get a second on this, am I? 86. See, again, 100 ADR. If I was targeting 3/4 of an ADR, that would be 75, which is here. So that actually would have triggered second entry. See what I mean? So the difference between quarter of an ADR makes a massive difference to the speed of exit on your entries. When I used to trade manually before I started using the EA pretty much exclusively, that is what I would have done, and that's kind of how I teach in the bootcamp. Is basically get in. If it doesn't work out, where's it going to bounce next? Look for the next resistance or support area. Make sure it's at least half an ADR away, and take your second entry there when you get a reversal alert. Yeah. What I've got now set up in the EA is set distances. So I think using 0.75 is kind of a happy medium. What you should really be doing is when you put the EA on your chart to get into initial positions, you should be saying, right, where's the next potential area that I'm going to look to scale in? Around about 3/4 of an ADR, and set it up for 3/4 of an ADR. Make sure it's not half an ADR or 1 ADR. Make sure it's around about 3/4 to make sure you get in on that next support area. So it's somewhere between there, isn't it? Is where we're likely to get that pullback started. I need another position on there, because at the moment, if that does that, it's not going to get me out. If I get in now, that gets me out with a profit. So I'm not going to interfere with the EA at the moment on these. I'm going to let it just play out as it is, but I'm going to change all these today. I've just seen it happen so many times over the last few weeks. It just makes sense to do it, doesn't it? So that is also extended on the 4-hour. Nicely extended down to 80. Again, big parabolic drop, waiting for that pullback up into that propulsion gap. So nice. If we are going to continue leg short, that's what we're looking for. If this is continuation long, that's just going to be a double bottom bounce. We're going to come and test those highs. So it doesn't really matter, does it? So yeah, nicely extended pound CAD. Pound Swiss, also very nicely extended. Swiss franc is on a mission at the minute. Absolute screamer. So this is pushed down very, very, very hard. We got this potential old support level here, which has been invalidated. So really that is what you'd be looking at. However, we do get bounces at these older levels sometimes. So we could see a bounce from here back up into propulsion there. Looking at it on the hourly, it's come out of its extension. We had nice sort of, not great, but a little bit of bullish divergence there. Tried to push up, failed, just taken out last week's low. So we've got lovely divergence formed now, which is bullish, back up into this area here. Again, that's my average because I've got 3 positions on it. That's where I think we want to get out. That's where I really want to take another position. So looking at it at the moment, this is 70. So that doesn't get me into a trade again. But 0.75 would 46. Doing some maths. 0.7. 52. Yeah, see that, even that isn't going to get me into a second position. So LCM, welcome aboard. G7 with Japanese. What? Morning, Tony. ECB had already been speaking 25 or 50 basis points in May. Yeah, we know about that. Test, good one. Putin, we have to continue our preparation of the Navy. Probably going to come over to the UK. Yeah, so basically we know the ECB rates are going up in May. It's just a case of, is it going up by 25 or 50? This is the debate at the moment that the ECB are having, 25 or 50. So it's all bullish euro regardless, which is, again, bullish Swiss, which is why we're getting massive push. LCM, sorry, voice to text glitch. G7 are meeting with Japan. Are they? Not quite sure what impact that would have on the financial markets. Depends what they're meeting about, doesn't it? I would suspect they're meeting about the issues with China. Obviously, it's obviously the escalation of tensions between China and Japan. I would imagine it's to do with that, and the fact that obviously if China does start to kick off with Japan, then people are going to get involved, aren't they? Mainly the US. So it might be to do with that. We need to be aware of there's so much tension at the moment. We saw the spike that we got with the Ukraine war when that kicked off. If it kicks off anywhere else, i.e. with Russia and anybody else, or with China and Japan, or with China and anybody else, we're going to find it, kicking off everywhere in the financial markets as well. So just got to be a little careful at the moment. It's a very turbulent sort of situation that we're in everywhere. So, but you don't know about it until it's happened. With these things, you just have to go, right, don't overexpose yourself. This is what exposure is all about. This is why we try and limit our exposure to one direction, two currencies at any time. So if you got into the US dollar long twice, do not take any more US dollar longs. Fine, you can take a short if you want, because if it comes down, fine, these are going to draw down and that will go into profit. But don't overexpose yourself in one direction on a currency more than twice. That way, if, for example, you are exposed long on the yen twice and the yen just continues to fly down, you've only got two positions which are going to go into drawdown on that one currency, haven't you? So you're just limiting your amount of exposure that you can, amount of pain that you can withstand, basically. Pound Swiss, covered that one. New Zealand dollar CAD. So again, that's very nicely extended on the 4 hour, the pound Swiss. So again, dropping down into M15 or M5, depending on what you want to get in time frame wise. I'm finding M5 is probably the best regardless. So M5 reversal alert long, good opportunity to get into today. That's very extended, and that 4 hour profit take move at some point is going to kick in. We haven't had the profit take literally on the entire thing. That's just a flag. So yeah, we need a profit take move on this. So when you measure that move and look at where it's potentially going to come back to, there's a lot of potential all the way back up to there. So if we get a shallow retracement just to a 38 level, which is a strong trend pullback, that's where we're coming to. If we get a deep or a medium pullback, you're coming all the way back up into this area, aren't you? And we've got this propulsion gap now up there to target as well. So just a case of waiting, but it's, the Swiss is very, very squeezy at the minute, very strong. New Zealand dollar CAD, nicely extended. Got a buy on that one from Friday on the hourly. So in that already on the drop. Very, very, very extended. It's just pushing down at the minute. So we're just waiting for that pullback move. So very much the same as that, back up into there, out. We've got that area up there as well, and this area up there, which is still in play. But that's where I'd be looking to target. New Zealand dollar Swiss. So again, big target there, big target there, big target there. I've got one entry on that. No, so I've got two entries on this one, New Zealand dollar Swiss. There's the average in there. So that's the target. It's still coming down. So again, Swiss franc still strong this morning. We're looking for another position somewhere down here. And then that'll obviously bring the average down and then get out when it pushes back up again. But very nicely extended on that one as well. So the hourly is extended. Your 4 hourly is also extended below the 30 level. Not quite as deep yet. But done some drawdown control on that initial position. Second one is on. Third one getting ready now. Look. Again, this is 61 ADR. So 61 is somewhere around that level there. So a little push down below that level, and I'll be in on another one. But as I say, I'm going to adjust the EA this morning anyway. M5 reverse alert is there at the moment, which is currently from that position 46. So 61 times 75%, 45. Yeah, so that gets me in to a third. Whereas obviously right now, if that reverses, it doesn't take that trade. So again, that 180i is just ever so slightly too big, I think. Having traded this variation of it for a few months, it's just slightly too wide. I agree, it's very turbulent indeed. Yeah, it is at the moment. Euro pound, Mandy, already covered Euro pound. I will cover it again. Extended on the hourly. On the 4 hourly rather. Up into this propulsion gap, we've got this resistance here. Looking for pullback anywhere really down to there. So the euro is bullish at the moment. If you look at the bias scorecard for the euro, we are very bullish across the board on everything. So the only short we have out there at the moment is the euro US dollar. And that is only going to get shorter. So there's no bias on this at the moment. So when we looked at COT this morning, the euro, the market is long the euro, the market is long the US dollar. That gives us a negative, a neutral COT bias. So there is no advantage, bullish or bearish, for the US dollar or the euro. Retail at the moment are shorting it, which means it's slightly more of a buy. So if retail start to buy it, that only becomes a stronger sell. Apart from that, everything else is pretty much bullish euro. Yeah. So thanks for the follow, whoever that was, Emmanuel. Excuse me. Welcome aboard. So the euro pound at the moment is range bound. We've got a COT bias of long. We've got retail shorting it, which means it is also a long. So where we are at the moment on the euro pound, obviously it's long. It's going long at the moment because everything else is positioned the opposite direction. So as long as that's the case, they will continue to do that. But as soon as retail all gets stopped out, probably there, we'll probably start that pullback. So it's a beautiful spot on the 4 hour. So looking for a pullback. We haven't had a pullback on the whole move. I mean, that we obviously did a profit take move on. That we did a profit take move on, really. So this is the move that we haven't done a profit take on yet. We had to push a little flag and then push. Looking for a drop on it, basically, at some point there. So it's good. Andres, pound US dollar. If there's any other pairs I haven't covered you want to look at, let me know. So pound US dollar, we're coming up into resistance. This area here from, not last week, is it? That's week before? Yeah, 4th. So basically, we've bounced there. We've pushed back down again. This is obviously at the moment in a bull trend. It's in a bull move, and it has been since March, mid-March. We're pushing down into this sort of propulsion area. There's a big propulsion area here from this low to that high there, which is this whole gap. Yeah. So we've come and tested that once. We're going to come back down into here. So we're going to pull back down into the 24.72 area on the pound US dollar. We're waiting for this US dollar strength and confirmation that the strength that we had on Friday is going to continue. So that sort of movement is what I would be looking for. However, if this is not going to continue to be strong, this is where we're going to continue that move from. But the pound is also weak at the moment. So there's no real reason the pound should be strong. It is always going to be a strong currency in the way that the US dollar is always going to be a strong currency when something else is weak. So if you've got something weakening like the New Zealand or the Aussie weakening, the pound will rally against it. The US will rally against it. Even if the pound and the US are coming down and weak at the moment, they will still be stronger than the others. They're the stronger currencies of the lot, and the euro, obviously. So it's very difficult, as you can see, to tell what we're doing with this pair at the moment. It's the major pair. So it's got the most liquidity. Therefore, it's the hardest thing to actually get any movement on, because there's always a lot of money moving through the two of them. Which is why people like to trade it, because it's a very high liquid pair. but being high liquid, you don't get too much crazy movement on it because there's too much liquidity in the market. Light liquid markets move faster and more erratically, like gold. So we've come back down. We've completed that propulsion gap. We've got this big one hanging over us down there as well. We've got a tiny little one there as well, which has just been tested this morning. We've got more upside targets. That one I would say is complete. So we've got another upside target there, I would say, to fill first. Then, depending on US dollar strength, either that or movement up. Difficult to call. But I'd be looking, where we are right now. And this is, again, why position trading is so good. It doesn't matter if this goes there or there, does it? If it goes there, I can get out with a profit. If it goes down to there, I can take a second entry. And when it comes back up into there, I can get out with a profit. We know it's going to come and test these areas because that's what it does. It's just a case of we never know which way it's going to go. If we only got downside targets to look at, then you only want to be shorting it. Obviously, depending on what the bias is on it. But if you look at the pound US dollar bias at the moment, yeah, it's a big sell. We've got COT positioning short. Yeah, so they are massively long the US dollar. They're ever so slightly short on the pound. Marginal. That's kind of a 50-50, isn't it, the pound at the minute? So retail, there's no bias whatsoever. So if we get retail deciding to go long on it at some point today, that's going to come down. If they decide to short it, it's going to go up. Yeah, because the market's going to hunt wherever the liquidity is, and the liquidity is going to be the opposite direction to retail trading. So it's going to do one of those two things. Can't help you any more than that. At the moment, we've had a reversal alert long on the hourly, and it's just coming back down to retest at the moment. So potentially, it looks like that is what it wants to do today. But it could be doing that before it comes back up into there. Don't know. But if you position trade it, doesn't matter, does it? Pick a direction. You'll be right or you'll be wrong. You have a 50-50 shot. Okay, that's everything covered. DAX, basically the ORB on the DAX. We've got the 15-minute breakout long as well now. So there's your 15-minute opening range. So the long's triggered. We had a nice one-to-one move out of it, but it's pulling back now. Again, very difficult one today to trade because there's no directional bias to the upside at all. There's no levels to look at all on the DAX to the upside. We're off. We're out at new highs. So whenever you get new highs, the only thing you can do is go out into the higher time frames like the daily. 4 hour in this case gives us that level as well. And as I say, there's nothing really to stop us until we get up to there. So literally, it's going to be price action. It's going to determine who's in charge, buyers or sellers. And at the moment, it looks like that's a good-looking pullback long opportunity from there. But hard. I don't like trading for anything when it's out in the clear blue skies to the upside because you've got nothing. You've got nothing to tell you where it's going to stop to the upside. Downside, we know we've got an obvious target to come back down and retest. We've got this as well. And we've got that gap all the way down there, haven't we? Target to the downside. We know where the downside targets are. Upside targets, virtually impossible. You've just got to look at price action and kind of try and jump ship. But by the time you've jumped ship on that confirmation of price action, that's your reward. Hardly worth it, is it? Hard work trading things when it's like that. Right, that's all I've got for you this morning. I'm working on this new indicator at the moment, which is going to be a kind of amalgamation of the indicators that I already have with some changes made to them. So I'm hoping to try and get that finished this week. And that's basically going to do support and resistance as well. Not that one. Not that one. If only I could click on the right button. So, yeah, so it's going to do support and resistance as well. But it's the thing I like about it and the thing I've changed about it, which I think is very useful, is the targeting. Just being able to clearly see targets now and all the old ones changing color. Something was severely lacking in that other version of the WRB. and obviously support resistance levels as well, which I'm going to tweak so that we've got another level in there. So it's going to give you always your most recent support resistance levels, the most obvious ones, basically, which is kind of the main turning points, if you like. So I might tweak that as well to make it go back a little bit further in history, but we'll see. I just need to play around with it. Okay, anybody got any other things they want to look at? Any other pairs? Anything else to discuss? I'm going to go through and change all that today. Change all the targeting on that. Why is that not changing? I've got a couple of EA evaluations running on this VPS as well. Both trading H1, M5 and ADR. Again, I'm going to change those as well. Nuno, it's possible to make an explanation about the drawdown control or a video in deep about this. Yeah, there's loads of them on YouTube. Nuno. So if you go into videos, there's one there on how to survive a squeeze. There is turn any losing trade into a profitable. Turn any losing trade profitable using aggressive drawdown control. There's one there. Obviously, day 4 in the bootcamp. This one there. That covers drawdown control and aggressive drawdown control in detail for 3 hours. Yeah. There is in the live room extracts. No, there isn't another one. I thought there was another one, but it's just basically that one: how to survive a squeeze and how to turning losing a trade into a winner. So these kind of cover drawdown control in a bit more detail, really. Oh, it's this bloke. Look, this is brilliant. Standing next to his Lamborghini. I got one of them. Have you seen this advert? If you haven't seen this advert, go and watch it. It's funny. Well, don't go and watch it, but obviously if you get it, it's funny. So yeah, this video basically, it's a crypto scam, so don't actually sign up for it. But yeah, basically this one gives you details on how to do aggressive drawdown control in more detail. So this is probably worth watching, but Bootcamp is the main area you want to concentrate on if you want to know about drawdown control, because it's all covered in huge detail in day 4. That's basically what day 4 is all about: how to position trade, how to manage your risk, how to do drawdown control, how to do aggressive drawdown control. It's 3 hours. So that's your focal point. We've got a couple of other RSIs just lit up there. New Zealand dollar CAD, I think was a more extended. Much different to normal, actually. My question is, how is it that the ADR set file does so well with little drawdown compared to the H1 RSI extensions? You would expect an ADR hit to possibly be extended. So the ADR set file First, there's two reasons why the ADR set file works so well. The ADR set file does get into squeezes as well. Don't get me wrong. This will get squeezed at points. It also makes less profit at points as well. So, but the main difference between the two is, first of all, targeting. So the ADR, just get the targeting and the drawdown control on the same bit. So your distance between trades is only half an ADR instead of 0.75 to 1 ADR, which is what H1 M5 was always used. Yeah. So you're getting in closer and tighter on your positions, which means you get a faster exit. It's also only targeting a 0.25% instead of 0.5%, or 1/3 of an ADR instead of half an ADR. Yeah, so our exits are faster, because obviously you can see with the ADR. So there's a good example. We had a big ADR push, and the next day we didn't pull back at all. We pushed down further. So half an ADR away, we got into a second position, and we managed to get out before the first position, because we're only targeting 1/3 of an ADR or 1/4%. It's a scalping strategy. Therefore, it's in and out a lot faster. Because it's in and out faster with smaller targets, it tends to take a lot less drawdown, because it's very quick to get out. Any kind of pullback, even a flag. Yeah, this is a flag. Look, if you look at this New Zealand dollar Swiss, whoops. So it's this move here. Actually, that is a bit of a pullback, isn't it? Really, it's a bit bigger than a flag. So even on a flag, though, you know, it'll get you out. Any kind of push to the upside, we need 1/3 of an ADR. It's tiny. It's a tiny target, which means that you just don't get that many positions going into drawdown. The old ADR set file, I think, had bigger targets and tighter spacing. So I think with the old ADR set file, I think that was using 1/4 of an ADR for spacing. So it would get you into drawdown quicker if you had a push which went very, very fast and hard against you. You know, when something's moved so quick and so fast, it leaves always in play a propulsion gap target. That one's got done. That one's there in place still. But it leaves a propulsion gap target. When was that? So we're going at 55,929. So nearest damn it there. And a second position was down here, wasn't it? Yeah. So that propulsion gap target there is kind of what this initial position was targeting. Didn't get to it. With the second one, obviously it came up and hit that target. We got out way before it. We got out here because we're only targeting that much movement. Really, it's difficult not to get out. Yeah. The only way you really get squeezed on the ADR is when you get a fundamental shift against you. So if you take an ADR reversal and it doesn't work out for a day, let's take this one as an example. If that doesn't work out for a day, yeah, and you go into an accumulation, and then you get another ADR, yeah, and another ADR, that's when you're going to get squeezed on it. But if you've got a 3 ADR move against you in one direction with no profit take, you know damn well that profit take's coming. And we don't really need much of a profit take. You can get out on a flag. If you've got a 3 ADR move like that against you, yeah, and then it decided just to do a flag break, right? That flag will be enough to get you out of those 3 positions, no problem. So you would possibly be in somewhere between 3 to 5 positions on a 3 ADR move, because it's spacing itself a half an ADR apart. So you'll only ever get into 3 to 5 positions if something pushes 3 ADR against you. Obviously, if it goes deeper than that, then yeah, you're in trouble. But if it goes deeper than that, you're in trouble on anything, aren't you? And that's what drawdown control's for. And the drawdown control is being done 1 ADR apart. So we get out with a third of the position on one ADR move against us. So we're scaling in half an ADR apart. If we carry on going and we get one ADR of movement, we scale out of 30% of that one. And now we take a third position. So we've reduced that top position by a third. We've got a second one on, and then we've taken a third after we've scaled out. Then if we get a flag, we're out with profit. And the profit is bigger than the initial scale out. So if the ADR set file gets into 2-3 positions, every single trade is profitable. If it gets squeezed further than that, we do drawdown control and we deal with it. You know, all of the set files that I do and all the position trading strategies that I've developed are all for getting you out in perfect conditions. If it's not perfect conditions, you're going to take losses, as every trader does. Yeah, this is not a strategy where you don't take loss. You take loss regularly. Yeah. So, you know, there's no losing days there, but yeah, got 2 losing days on this set file at the moment. Got a losing day at the moment there on H4. We had 1 losing day last week. This is it takes losses, but it only takes losses when the market is squeezing out of its normal 58% range. It spends 58% of its time within its average daily range. If we can target within that average daily range and exit a position, the probabilities are 58%. If you're a 50-50% trader and you can get a positive risk reward, you make money. It's literally it. It's as simple as that. It's risk management. So, but that's why the ADR works. But as Diamond will attest to, if he's still in here, the ADR set file often will be the one that will get you into the biggest squeezes, because to hit ADR, you don't necessarily have to be extended on the hourly or the 4-hourly RSI. So in this case, on that entry there, yeah, you can see the initial entry was there. Somewhere around there, wasn't it? On this New Zealand dollar Swiss. Or was it somewhere around there? I can't remember. But anyway, that's an ADR hit, right? Not extended on RSI. So the danger with the ADR reversal is you can have an ADR hit and get you into a position when we haven't had the full strength of the move. And the move can continue, obviously, all the way down to there. Yeah. And that's how you get into squeezes on the ADR. So again, every strategy has a downfall. There is no perfect strategy. It's just a case of fine-tuning the risk parameters to suit what could happen as a worst-case scenario. All you have to do every time you're getting into a trade is think, what's the worst-case scenario? And again, it's how I teach in the bootcamp. Right, I'm going to take a long here. What if this goes against me? The first question you ask yourself is, when I'm wrong on this, and assume you're going to be wrong because you will be wrong with the vast majority of the time. If that wasn't the case, you wouldn't be needing to do a strategy like this because you would be profitable. If it's wrong, where is it going? How far is it going to go potentially before it's going to bounce again? That is what I need to pay attention to every time the button is hit. With the ADR reversal strategy, if you were to get in, so for example, something like that, you would be looking at it and going, right, well, we haven't even hit ADR yet, RSI extension to the downside yet. So there's definitely a good ADR's worth of movement probably down there. So look left, where's the support resistance potentially for a bounce point? How far apart should I be scaling in? And again, the EA will automatically get you in with the settings that it's given. What you should be doing ideally is every time it gets into a trade is adjusting those settings to match that particular market that you're trading. But the lazy part of people doesn't do that, does it? I do. You know, it's a case of I do things like that. I adjust the settings, and that's what I was doing with Fiddlecrest, adjusting my position distancing based on what's coming up. And you find it goes before it even gets to the next level of support you're looking at, and you miss your second entry. There's never, ever going to be a condition where you're going to be able to get it right all the time. Doesn't happen. I wish, as we all do. Tom, what happened to the 150 plus viewers? I don't know. They've all gone. We had 150 in here before. We've got 85 now. Yeah. People aren't giving it enough thumbs up. Hit the thumbs button. Yeah. There you go. Hopefully that helps. Brian, Blue Knox came across my radar over the weekend, taking a look at them. Maybe a better version of Apex. Someone mentioned them the other day. Blue Knox. We did have a quick look at them. End of day account is what you want. Funnily enough, this is exactly the same membership system as Apex. This is a membership system called A Member. There you go, A Member Pro. So this is the same, exactly the same system as Apex. So you just need to check out their deets, but it uses, I would say, you know, if I wanted to rebrand myself because I wasn't doing very well, this is the sort of thing I'd do. Amar, pound US dollar, literally just done it. Rewind. ADR is my nemesis, John. Yeah, I have a love-hate relationship with it. Yeah, if you get it out, ADR. The other thing you can do with the ADR reversal set file, and again, go and back test all of this. Whenever you're looking at any set file, that's the wrong one. If you go and back test it with different settings, you will see what kind of drawdown it's capable of getting into. Yeah. So if you don't like ADR because sometimes it gets into too big of squeezes, obviously you can just do drawdown control quicker. So this one is set to get in at 0.5 ADR as a distance between entries. It's got 1 ADR as a percentage of drawdown to do. So what you could do is you could leave it at 1 ADR, or you could reduce that down to 0.75. So we get into one trade, it pushes against, we get into a second trade. If it starts to push against, get out of more of that faster and you'll take less drawdown. Or get out of more of it at 1 ADR. So if it pushes down 1 ADR against us and we get ready to take our third position on it, scale out of 50% of that, not 30%. Do more drawdown control quicker. The strike rate on the ADR reversals is high. Yeah. So as you will see, I mean, you can see now it's in no more than 2 positions. Swiss yen has got 2 positions on. Everything else is in 1 position. If I go through some of these trades that have been taken recently on this one. Yeah. So US dollar Swiss, 1 position. US dollar CAD, 1 position. Euro US dollar, 3 positions. Pound US dollar, 2. Euro US dollar, that's drawdown control. CAD Swiss, 2. New Zealand Swiss, 2. Aussie New Zealand, 1, 2, 3, 4. Euro New Zealand 2, Pound New Zealand 2, Swiss yen drawdown control, Euro CAD 1, Pound Swiss 1. Yeah, everything, virtually every trade is 1 or 2 positions out. Occasionally 3, sometimes 4. Getting beyond 4 positions is rare, but when it happens, it hurts. So what you could say is, if I'm scaling in at 0.5 ADR as my distance, yeah, I'm going to assume my normal worst case scenario is 3 positions. So 3 positions, it would have to move 1.5 ADR against you, yeah? To get you into 3 positions would have to be the minimum distance it would move to get you into 3 trades. So if when you got to 1 ADR, yeah, you scaled out of 50% of your first position, you know with a high degree of accuracy that you're not going to take more than 3. Therefore, if you got out on a third of an ADR on that third position, you're going to take very small drawdown control if it squeezes against you further. But if it does continue to go further against you, you're going to get out of more of it faster. But it's not going to happen often. As you can see by the P&L, it doesn't happen often. Just trying to look at and try and find one where we got into more New Zealand yen was 3. It just doesn't get into more than 3 positions. CAD yen 2, CAD Swiss 2, Aus US 2. There's one. Odd CAD 1, 2, 3, 4. There was 4 positions on the Aussie dollar CAD there. That's going back to 23rd of March. So, this is a month. 3 on New Zealand, pound New Zealand. 4 on euro New Zealand. Yeah. So, if you in a normal scenario, normal, what I would class as normal market conditions, where, we push a bit more, we pull and get that profit take. In normal market conditions, you're not going to get into more than 4 positions, 4 trades in one position. The average is going to be 3. The norm is 1 or 2. So if you set up your drawdown control personally for your comfort levels to say that is going to be your worst case norm, when we get to 4, it's squeezed a lot further than normal. To get into 4 positions, it has to have gone 2 ADR further than the initial entry, which was already at least 1 ADR. Because don't forget this set file, to get into a trade on this set file, it's got to have moved 1 ADR down. Yeah, that's beyond its normal average range in one direction. To get you into 4 positions, it's got to have gone another 2 ADR. So we got to be sitting at somewhere around 3 ADR in a push in one direction with no profit take move. That's got to be at least an 80 RSI extension to the downside. At least, isn't it? To get 3 ADR, solid 3 ADR move against you in one direction. It's not something that happens regularly, is it? Here, for example, look, on this New Zealand dollar Swiss, so 61. So we look at 180. Yeah, so that is 180 ADR. 180 pips. That's 3 ADR. So this is actually sitting at 186 at the moment. That's 4 ADR. But we had an exit there. Yeah. That's all we're looking for. So this is kind of probably what you would expect to be a normal worst case scenario. And for the market to push that hard, that fast without doing a profit take move is not often, is it? Because we've always got some kind of propulsion move. The initial ADR move creates a propulsion gap. It has to. It always does. There's always a target after the initial ADR move for it to come and retest as a worst case scenario if it wants to carry on. And that's normally what happens. We get the push, ADR, we get the pullback to propulsion, and then we get the continuation leg. That is a third of an ADR, which is our exit. That's why it works so well. But as Jarman said, when you get squeezed, you're going to get squeezed. It doesn't matter how you get in. If you get in on H1, a 4-hour, an ADR, doesn't matter. If it's going to squeeze, it's going to squeeze. The reason for you entering in a position is totally irrelevant. However, if you're getting on a 4-hour RSI extension and then it squeezes, that is going to be your lowest drawdown scenario, which is why the H4 mean reversion has usually the lowest drawdown. But it also makes the least profit because it has less opportunities. Yeah, swings and roundabouts. This is why there's so many strategies to put out there. And obviously those are my strategies. You can trade whatever you like with it. Any mean reversion strategy works with position trading. If you've got an entry on Bollinger Bands using CCI, MACD, stochastic, if you want to be that silly, they all work as position trading strategies because the market, every mean reversion strategy is taken at an extension looking for a reversion to the mean. That is where we scale in to our exits, isn't it? There you go. KB, retracted message. Didn't see what your message was. Obviously, it wasn't something I needed to look at. Right. That's all I've got for you today. So I'll be back at 2:20 this afternoon. DAX at the moment is coming back into propulsion. We've got that gap up the top there. So difficult to tell where this thing's going today. Didn't quite get that gap done, did it either? So again, could go either way, this one. Not particularly great breakout to the upside. Outro's not in here, is he? Outro's taking the 5-minute opening range breaks at the moment. The 5-minute pre-market opening range breaks at the moment, which are doing incredibly well. So I might have a look at that. I'm going to do some back testing on that. Pre-market 5-minute seems to be making a serious amount of money. Literally a 1-to-1R with a 50% plus strike rate. I'm going to do some testing on that. It's on my list to do. That looks like a really nice looking set file. That would have made a beautiful profit today. So entry would have been long, stop under the low. There's your initial exit. That's what you got as a max, which is many are. Right. Okay, so I'll be in the Telegram group if you need me. Anything else, obviously I'll be in there. Otherwise, I'll be back at 7:50 tomorrow morning, same time. I'll be back at 2:20 this afternoon for the New York session. The news is at 1:30 for Empire State, so just be aware of that. We may well get some movement off of that, may not. We'll have to wait and see. The market will just use it to do whatever it wants to, but be aware of that 1:30 this afternoon, an hour before the market opens. Other than that, we just got ECB Lagarde this afternoon, so no other news to look forward to. So just have to see whatever happens with everything else. All right, have a good one. Anything you need, let me know. Otherwise, I will see you hopefully this afternoon. Have a good day.